Hi, as you all know by now, the government had made some amendment to interest deductibility for the rental properties. So I'm just going to go through how it's going to be rolled out based on the information we have as of today, 25th of March 2021. And the more details will come later in the year, and we will go through it in more detail in a webinar format or video format, and we'll send it to you. Based on the information that we have today, there are two crucial dates that we need to look at. The first one is 27th of March 2021, which comes in 2 days. And then the next crucial date is 1st of October 2021. So let's go and see how this is going to work. So if you purchase your property before 27th of March, if you have an investment property already, or if you settle your property before 27th of March, then what's going to happen on the first year, which is from 1st of April 2020 till end of March 2021, the existing financial year that we are in it now, obviously you can claim 100% of the interest that you have paid. So the 100% deductibility will apply then. Then after 1st of April, we'll go to the transitional mode, which is will change to October. So we have from 1st of April 2021 till end of September 2021. You still can claim 100% of your interest, and after that we'll switch to 75%. So from 1st of October 2021 till end of March 2022, you would be able to claim 75% of your interest. So as you can imagine, our job as accountant become a bit more complicated, and it's going to be an interesting year how we're going to do your tax returns for your rental property from next year. So this was the first scenario. The second scenario is if you purchase your property after 27th of March 2021. So if you do that, then what's going to happen in the first period, because this would be the first period that you're going to look at, you can claim the 100% from 1st of April 2021 till end of September 2021, and after that you cannot claim any interest. Okay, so that's that 27th of March. If you purchase your property in 1st of April or 15th of April 2021, you can claim your interest till end of September, and after that is zero claimability, so you can't claim after that. And if you purchase after 1st of October, then from the day dot you can't claim any interest whatsoever. So that's a 3 different scenario we looked at. I know it's a bit complicated. I'll try to make it as clear as possible we can. So what's going to happen after that? So the 1st of October 2021 till end of March 2022, you have 75%. Then the next year, next financial year, which is 1st of April 2022 till end of March 2023, that would be still 75%, and you can claim that if you have an existing investment property purchased before 27th of March 2021. Then after that, it drops down to 50% from 1st of April 2023 till end of March 2024, and after that will drop down to 25% between 1st of April 2024 till end of 2025. And the whole thing will finish at that year, and after that it's going to be basically 0%. So after 1st of April 2025, all the investment properties, doesn't matter when it's been purchased, it's going to be 0%, and it's easier for everybody to understand what's going to happen after that. So what you have to do and what does it mean for you guys? So if you have an existing investment property, you would have been making losses before, and you used to claim depreciation. So the first thing that has happened before was depreciation has gone. And then after that, what has happened last year was the loss deductibility. So you couldn't claim the losses against your personal income. So that has gone. Now, and this level, that with these changes you can claim those interests that you had on your mortgage. So the planning that was before to load your investment property with all your borrowing, and you have your own home without much borrowing or a little bit of borrowing, that doesn't work anymore because that interest on your rental property is not going to be claimable. And lots of people would have had interest-only loans because they could have claimed all those interests. Now those interests is not going to be claimable. As we saw gradually, it wouldn't be claimable after 2025. So you need to plan your cash flow and see how your cash flow is going to be affected throughout these 5 years, and make a plan, make sure you have enough money to pay the taxes. And that tax is going to be different between different people's and different income, because if you are on a higher income, the threshold of the tax has gone to 39% now. So obviously it's going to affect you a lot. If the interest rate from the banks goes up, again, it's a lot of interest that you're going to pay, so that's going to change the scenario. So there are lots of moving options here that can change the scenario, but it would be good to have a look at it and see how it's going to affect you and your investment property. So if you want to have a chat with us, make sure you contact us on support or info@wiseadvice.co.nz. Here's our telephone numbers. You can also find the link to the article below or above this video, depends where you're checking it, and we would be able to help you if you have any question, and we can help you with the planning of the next 5 years to see how it's going to work. Please do not contact us at the end of financial year because it's the busiest time of the year for us. The availability of the time we have for the meeting and answering your questions, it's after 1st of April. And as I say, there are going to be a lot more details. There are different scenarios that we don't have a clear answer. And when the details come through, we do a full webinar with all the details and we publish it here. So there are some gray kind of area there that we don't know the answers yet. We guess what the answers are. But when we find out those answers, we do a full webinar and we inform you with all the changes. Thank you so much.